So really the two options that were available for most of you were the economic injury disaster loan and the paycheck protection program. The EIDL, which I'll refer to it here on out as that, provided loans up to $2 million, but only a maximum of $10,000 was in the form of a forgivable grant. And that was doled out for the most part with $1,000 per cap per employee. So if you had 5 employees, the maximum forgivable grant portion was $5,000. For anybody who applied for this prior to getting the PPP, that grant portion does reduce the forgivable portion of the paycheck program. So if you got a $10,000 EIDL grant and a $100,000 paycheck protection program, you're only going to end up with $90,000 of that PPP being forgivable. So effectively, if you get both, you'll end up returning the EIDL money. So the EIDL also, once you get that initial grant, you're then eligible to apply for an extra $2 million loan. You're not required to. You can take the grant money and be done. Then on the paycheck protection program, which is where the bulk of the interest is, many of you know, the loan amount was based off of 2.5 times your average monthly payroll with a annual salary cap of $100,000. That can be forgiven as long as you meet specific requirements. The main ones being that at least 75% of it are used on payroll. You maintain the same level of full-time equivalent employees. And then the excess 20% can be used on interest, utilities, and rent. And then for the amount that isn't forgiven, it does convert to a 2-year loan with 1% interest rate. So to start, we're kind of going to run through the definitions of different terms that I'll be referencing throughout the presentation. Big one is payroll costs. Because payroll costs, as it's defined in the PPP, really isn't how many of us would think of it as. It is going to be the gross wages that you pay your employees, plus benefits, which include health insurance and retirement contributions from the employer. One caveat with that is many of you wait until the end of the year to make your retirement contributions, or send your tax return and wait until September or October to make those retirement contributions. We are hoping that they adjust it so that we're able to do that the same way we have historically and wait to make those retirement contributions. But as it stands today, we may need to have you pay in a portion of the retirement for that 8-week period while you have it. And then the last piece is, for those in Michigan, it's Michigan unemployment tax. I know we've got a few out-of-state people in here, so for you, it's state unemployment tax. And I'll use an example. Denver has basically a head tax where you pay X amount of dollars per employee that works in Denver. You would also be able to add that to payroll costs. The other eligible costs, which you can't be more than 25% of the loan amount, are rent, interest on any debt incurred prior to February 15th. So any existing debt you can use the interest payments for. And then utilities, which include electric, gas, water, phone, cell phone, and internet. I know we have a lot of physicians on this, and as of right now, it is our understanding that an answering service is not included in utilities. As with a lot of things with this, it's subject to change. The SBA just released their initial application for forgiveness over the weekend, and that changed several things that we previously understood to be different. So there's potential for changes to this on any given day. So a lot of you have heard thrown around that you have 8 weeks or 2 months to spend the money. It is definitively 8 weeks. So you have 56 days. It is not 2 months. So all of the, and this was nice, one nice thing that they changed with the application yesterday. Previously, we were worried that it was going to be a hassle since it was defined as incurred and paid. So our concern was with payroll, where if, let's say you got the funds on the 10th of the month, but your payroll period ended on the 15th. The way it was initially written, we were going to have to accrue 5 days of wages at the beginning. That is no longer the case. They are going to allow you on the alternative 8-week period, they're referring to it just for payroll, to start that 8 weeks on the first day of your next pay period. So if you got the funds on the 10th and your next pay period started the 16th, you could start the 8 weeks for payroll on the 16th. So that way it aligns with your pay periods and you're not messing with having to do accruals on the front and back end of it. Similar to the other expenses. If, say, it's set up so that you get the 2 months of normal expenses. So if you have a phone bill that's due 3 days after the end of the 8-week period, they're going to allow you to pay that phone bill after the 8-week period ended and still apply it towards the other cost amounts. So this is the alternative payroll that I referenced actually on the prior slide. Then the other big news that came out with the application was this full-time equivalence. We had previously been operating under the assumption that a full-time equivalent, or FTE, was someone who worked at least 30 hours, because that is how it was defined in the Affordable Care Act, which was the last major piece of legislation that full-time equivalents played a significant role. Unfortunately, with the release of the application, they have defined an FTE as 40 hours. So anybody who works less than 40 hours is not considered a full FTE. So it's basically however many average hours you work divided by 40 is what that percentage is. So if you work 30 hours, you're going to end up with 0.75 FTEs. There is a alternative option or a simplified method to that, where you can choose that anybody who's 40 hours or more is 1 FTE. Anybody who is less than that is considered a half FTE. So it doesn't matter whether they work an average of 5 hours or they work 39 hours. They're considered a half of an FTE. So it wouldn't necessarily make sense for a lot of people, but if you're somebody who has, let's say, two, three employees who work 5-10 hours a week, then it could make sense for you to elect this simplified method, since you'd actually get an increase in the number of FTEs of that. And then the other piece of it that came out is that owners do not count in the FTE calculations. However, there is nothing as of now that prevents you from hiring family members to meet FTE requirements. So if your spouse, you can add your spouse or kids. As of today, there is nothing preventing that. I wouldn't guarantee that's not going to change, but as of today, that is an option if you look like you're going to have issues with the FTEs. So the other piece that came out is they really helped define this FTE safe harbor, which the good news is I think most businesses will be eligible for this FTE safe harbor, which is really a great thing because the actual full calculation for the FTEs isn't great. So the main points on the safe harbor is that you are eligible if your average FTEs as of the February 15th payroll. So however many full-time equivalents you had on the pay period that covered February 15th, that is what you're using for the baseline. As long as that amount decreased between February 15th and April 26th, that is the initial hurdle to be eligible for the FTE safe harbor. Which I know most of you, once things shut down, your full-time equivalents decreased because whether you completely shuttered or whether you worked a reduced schedule, employees were laid off or furloughed for the most part. And with this safe harbor, you're only required to bring back the equivalent FTEs prior to June 30th of 2020. So as long as you bring back basically the same level of workforce by June 30th that you had on February 15th, you will meet the safe harbor requirements. And an original provision was that it had to be the same employees. Thankfully, they scrapped that. So it doesn't need to be the same employees. You can bring back new workers in order to satisfy that FTE safe harbor. And then we'll cover this more in the later slides, but if a former employee rejects your offer to come back to work, they do not count for this FTE safe harbor. They will count as an FTE, but you're required to go through the full calculation if that's the case. And then there's also a wage reduction safe harbor, which is the same method as the FTE. You take the wages as of the February 15th payroll, as long as they decreased in that period from the 15th to April 26th, you have until June 30th to restore those wage levels and you meet the safe harbor. All right, so we've got a couple of questions that I'll answer right now. PPP for payroll. Can I use 100% of PPP for payroll and make it forgivable? Yes, you still need to meet the FTE requirements, but the original intent of this law was to keep people on payroll. So as long as you meet that 75% minimum threshold, you can use as much as you want on payroll. And then as a self-employed sole entrepreneur, do I simply take an equity draw to my personal bank account to properly track my PPP funds? So it is our understanding right now that if you're a Schedule C self-employed individual, that yes, you will be writing checks from the business account to yourself personally, and that will count as payroll since you're not actually on payroll as an employee. And it is the maximum amount that each individual can be paid and be forgiven is $15,385. That is using the $100,000 annual salary cap that was used to determine the PPP loan amount. So you end up with the $15,385 by taking that $100,000 cap, divided it by 52 weeks times 8, gives you your 8-week wages of $15,385. So for most of the owners out there, that is what you're going to end up paying yourself for the forgivable portion. And then we have, should we include S-Corp owner employee in the FTE calculations? S-Corp owner employee is paid monthly versus other employees as weekly. Do we need to communize the payroll to weekly?
Yeah.
Yeah.
Zoom.
So in the FTE calculations, the S-Corp owners are not counted, both on the front end and back end. So it really doesn't have an impact on the overall FTE calculations in terms of what's forgiven. In terms of the payroll schedule, the owner payroll does not need to align with the other employees' payroll. It may be easier, or when it comes to tracking things, it may be easier to align your payment schedule with the employees, but it is not required. Is forgiveness proportionate if we don't fully meet all of the payroll requirements? So I'm going to cover that one later on because it's a little bit more of an in-depth answer. And then the last one is, does the employer portion of federal payroll taxes count as a payroll expense? That is no. That is where I referenced early on that what we may consider payroll cost isn't necessarily how they define it. So it is only the gross wages plus Michigan unemployment. You do not get to count federal payroll taxes. All right. So we're going to jump back into the slides. So this is the FTE calculation if the safe harbor is not met. I've done my best to simplify this as much as it can be. And it has potential to change, but this is as we understand it right now. So you have a few different options to come up with a baseline full-time equivalent amount. And when I say baseline FTE, that is what you are going to be comparing to the 8-week forgivable period that you have the funds. So as long as you have more FTEs or equal FTEs in that 8-week forgivable period than you did in these baseline periods, then you meet the FTE requirement. So your two options are, you can either look at the average weekly FTEs from February 15th, 2019 to June 30th, 2019. Or you can look at it from January 1, 2020 to February 29th, 2020. They did this really to recognize that some people's businesses are cyclical. So they offered two different options to really give you a choice. So obviously you're going to want to go with whichever one of these has the lowest FTEs. And then the last one is if you're a seasonal employer, you do have the option of choosing from May 1st, 2019 to September 15th, 2019. And when we are determining the FTEs, both for the baseline period and for the 8-week forgiveness period, it's determined on a weekly average. So the example down here is that if you had four full-time employees for 4 weeks in January of 2020 and 2 full-time employees for the 4 weeks of February 2020, your weekly average baseline FTEs would be 3, because you'd have that's basically, it's the average. You can see the calculation there if you need it. And all of this, I will be sending these slides out in an email to everybody who registered for this, along with a couple of other documents that would probably be worth reviewing. All right. So now the questions are coming in. Employer. So someone asked, please explain bonus provision that will count towards the forgivable amount. So employee bonuses absolutely count towards the forgivable amount as long as it does not, each employee's pay does not exceed that $15,385 in the 8-week period. So as long as you give them bonuses and they stay below that, they will count towards the forgivable amount. Question, I got the EIDL as well as the PPP. How do I send it back? So that is going to be when you actually apply for the PPP forgiveness. On the forgiveness form, you need to report the EIDL money that you received, which is going to reduce the forgivable portion. So then that amount will get converted to the 2-year loan, which depending on the amount, you can either choose to pay it back over 2 years, or if it's $1,000, you might just write the check then to be done with it. How does work share affect FTE? I will cover that one later on because, again, it's more of an in-depth answer. Do we need to produce any evidence of ending of unemployment benefits for PPP waiver? I can't definitively answer that one way or the other. You do need to provide a written offer of employment that was rejected in order to have that employee count towards an FTE. You then should be reporting them to unemployment to have their benefits ended because they were offered a job and refused to come back. Whether or not you'll need to show evidence of that, they haven't said, but they should be reported to unemployment to have their benefits ended. If you've received a PPP loan and an EIDL loan, can you use the EIDL loan for other business expenses? Yes. Health insurance does count as a payroll cost. All right, so we're going to jump back into the slides now. So then this is, once you've determined the FTEs of your baseline period and the FTEs of the 8-week forgivable period, If you come up short on the FTE requirement during the forgiveness period, you do end up with a proportionate reduction in the overall forgivable amount. So let's say you have a $100,000 loan and you only ended up and you had 10 full-time equivalents for your baseline FTEs, but you were only able to bring back 8 full-time employees during the forgiveness period. So your FTE reduction quotient would be 80% or 0.8. So with that, it reduces the forgivable amount of the entirety of the loan, not just the 75% payroll portion. So if you have a $100,000 loan and you only met 80% of the FTE requirement, you're only going to have $80,000 that's eligible for forgiveness. So really, the FTEs is where they can potentially hit you hard right now. If you come up short on payroll, it's just a dollar for dollar reduction, so it's not as painful. It's the FTEs that we really need to be worried about hitting. And then we touched on this earlier, but there are some exceptions for the FTE counts during the forgiveness period. As you're all well aware right now, unemployment benefits are quite attractive, as you can make in Michigan, you make the equivalent of about $50,000 a year on unemployment right now. So many of you with lower wage workers, it's going to be difficult to have them return, and they may just say no. So this is where, if you do offer to bring an employee back and they say no, make sure you are making a written offer. And that can be done either via email, or I would recommend sending it certified mail and document it, because we may need to submit that documentation showing that that employee refused to come back to work. Also, any employee that was fired for cause, they will count as a full-time equivalent employee for this. And then finally, any employee who voluntarily resigned or requested a reduction in hours will also count as an FTE for these purposes. So this was a big concern amongst a lot of people, and they did finally address it in the application yesterday or over the weekend, that you won't be punished for trying to bring employees back and them refuse. So this is the wage reduction that I referenced that isn't quite as bad of a punishment as the FTE reduction. So you need to maintain employees' average wages be at least equal to 75% of what their average wages were during the baseline period of January 1 through March 31st of 2020. And I know that is a different period than the other periods that we've looked at, because I guess they just wanted to keep things interesting and mix it up on us. So that one, again, not as bad, because if you don't hit the 75% threshold on an employee, it's only reduced dollar for dollar below that 75%. So let's say the employee made $1,000 a week, and so the 75% would be $750 that you would need to pay them. If you only paid them $700, your forgivable portion of the loan would only be reduced by the $50 that it was short of the $750 requirement. So again, in an ideal world, you hit that 75% threshold, because ultimately the money is either going back to the government or the money is going to go into your employee's pocket. So really, if you're near the end and you're coming up short, there really isn't a reason not to just bonus employees out to hit that 75% threshold, because ultimately you're just giving the money back to the government if you don't. Really. So we have a question that if you received PPP loan in early May, can you use the 25% to pay rent more than 2 months of rent, like June, July, and August? No. The expenses need to be incurred and paid. So you can't prepay payroll, you can't prepay rent, you can't prepay interest. It actually needs to be incurred and paid in that 8-week period. So we'll kind of do a quick recap of the PPP forgiveness, and if any of you have questions on it, please shoot them into the chat right now, because we will be then moving on to the next piece of the puzzle once we wrap up this slide. So, overarching is most of you should meet these requirements fairly easily if you're back to work by the end of June. You need to do 75% of funds on the payroll costs. The remaining 25% can be used for the rent, utilities, and interest. And then the big one is the FTE safe harbor. Most of you, if you're returning back to a somewhat normal schedule by the end of June, should be able to meet the FTE safe harbor. So that's really a key point. And then another one is need to diligently track expenses. If possible, we recommend putting the PPP funds into a separate bank account so that there is a clear and obvious paper trail. Obviously, many or most of you have already gotten the funds. Some of you have had them for as long as 3 weeks. So we're a little late in the game to be changing things, but it's really important that we keep records of all of the expenses. So keep the canceled checks, make sure you're keeping the receipts, and then obviously the payroll records. And if you're doing your own accounting, which I know many of you or most of you on the call, we handle the accounting for you. But if you're doing it yourself, we recommend setting up separate expense accounts for the PPP funds. So for the payroll that you pay in the 8-week forgiveness period, you set up a wages PPP. For the rent, you set up a rent PPP, so that everything that we'll need for the PPP forgiveness application is easily broken out and identifiable at the end of the 8 weeks. Because the practical steps of how it will work is, at the end of the 8-week forgiveness period, you then have 60 days to apply to the bank to have the loan forgiven. And then I forget what the time period is, but then the bank approves the forgiveness amount. So we have a little bit of time, but we don't have a huge window to gather all of your expenses and submit them to the bank to be forgiven. All right, so I'm going to scroll through here and answer the PPP questions before we move on to the next piece. If you're a corporation and owners are paid a salary, do the owner's salaries count? Yes. If the owner is on payroll, they count. They can be paid up to the $15,385, which is the maximum amount that anyone can be paid and have it count towards forgiveness. And then we hear, so we may be able to ease FTE concern by rehiring late, like on June 29th. So with that piece, I am expecting they're going to need to issue additional guidance on that portion of it. The way that it reads right now, yes, you could hire somebody back on June 30th and it would meet the FTE safe harbor requirements. I suspect they will issue additional guidance. When that happens, we don't know. Obviously, we all hope sooner than later, but we're 2-3 weeks into this thing and they're just giving you the form that actually tells you how things are going to be forgiven. So we don't know when that will come. I would say if we don't have additional guidance by the middle of June, it would probably be the safe thing to bring them back a little bit before the actual June 30th date. But again, I expect the guidance to be issued on that before then. Do we need to pay all the taxes withheld for the covered period before applying for waiver? It's our understanding as of now, no. You can make the deposits on your regular payroll deposit schedule. So if you were a quarterly depositor, you wouldn't need to make those tax withholding deposits until the end of the quarter. So we have one question someone sent in actually on their individual stimulus check. On any thoughts on they haven't received it, any thoughts on the delay? The short answer is the system's backed up. People are slowly getting the stimulus funds. That the 25% may be used for other. Any possibility that the 25% may be used for other business expenses before the 8 weeks are up? So I think I understand the question, and yes, you can use it for the rent, utilities, and interest in that 8-week period, up to 25% of the PPP funds. Can you collect unemployment and the PPP loan at the same time? So I will we'll address this more in the workshare portion, but the short answer is there is nothing stopping you from collecting unemployment and the PPP loan at the same time. But I would be very concerned about it being forgiven at the end of the period, since the wages need to be incurred and paid in the 8-week period. So if you were to write yourself a check for $15,385 on the first day you got the funds, and then immediately go back on unemployment, to me, that is a very tough sell that you incurred $15,385 of payroll in one day. So I can't recommend that as a model to use. All right, so we are going to jump back into the slides. So on returning to work, there's been a lot of talk about what you need to do to ensure your employees are safe. And a lot of it depends on where you were at locally. I'll use Oakland County as an example. You are supposed to provide masks to everybody and check their temperatures when they come in to work. that realistically isn't an option for most people. I have no knowledge of how they intend to enforce that or could enforce that, but that's an example of a local government unit, and there have been cities that have issued specific guidance on what they're going to require. So I'd encourage you to start at your local level, check your city websites, the county websites to see what they say about reopening. And then also look at the federal and state guidelines. You've got a lot of guidance from the CDC in the links here and the state of Michigan that are all offering, that are all offering guidance. I think most people are looking at the fact that at a minimum, you're going to have to figure out how to adhere to social distancing guidelines. So keeping people 6 feet apart. Likely people will be wearing masks. You'll need to provide hand sanitizer throughout the office. And really it's the basics that we've been hearing for 4 months. I'll also send out a Word document to everyone in this that provides kind of more details and recommendations on that. So the Michigan Work Share. This was, I would say that this was the greatest thing since sliced bread, right up until they issued the guidance that an FTE is 40 hours instead of 30. Because under the work share program, the way that it works in normal circumstances is if you can choose to reduce your employees across a work group by a proportionate percentage. So let's say that you're a manufacturer that lost a contract, so your workload is reduced by 20%. You can reduce all of your employees to 4 days a week instead of 5. So you'd be paying them 80% of their regular wages, and then they would collect 20% of their Michigan unemployment benefit. So normally it's not that much. The maximum Michigan unemployment benefit is $362. So 20% of that, not a great deal for the employee. But currently, under the work-share model, the employee is eligible for the 20% from Michigan unemployment plus the full $600 federal unemployment supplement. So they are going to end up with, in Michigan, essentially $670 additional per week if you reduce their hours from anywhere from 10% up to 60%. That is the threshold that you're allowed to reduce hours by within the work share. And normally it's only available for full-time employees, but under the current emergency order, part-time employees are eligible. So if you have someone that works 20 hours a week, you can reduce them to 15 hours a week and use the work share at 25%. So in this situation, it saves you, the employer, some money by reducing wages when you may not still have the work for a full-time workforce to do. And also, it makes the employees happy who are potentially looking at coming back to work and making less money than they were on unemployment. This provides an incentive for them to come back into the office, earn close to their regular wages, plus still get the bulk of their unemployment benefits. So to kind of give you an idea of how beneficial this can be to an employee, I'll show you an example in a couple of slides. Actually, I'll flip there and then go back to it. So to make things easy, we'll say the employee has a $52,000 salary, so they get paid $1,000 a week. So let's say you choose to reduce their hours to 60% of what they were working before. So they'll receive the $600 that you are paying them as 60% of their wages. And then they are going to receive it's a 60% reduction in this model. So they'll get $400 from you. And then in unemployment benefits, they are going to get from the state of Michigan $217 plus the $600 federal benefit. So they're going to end up making over $1,200 in the week, when previously as a full-time employee, they were only making $1,000. So they will be working less hours and earning more money for just about everybody who makes less than $50,000, $60,000 a year. They will be making more money by doing work share than they did working full-time. I can see some of the eye rolls going on in the video chats, but I mean, really, it's an effective tool to bring back the employees and keep them happy. So we'll kind of go back on some of the requirements of this. And like I said, the 40 hours of FTE threw a wrinkle into it. Because when it was 30, you could put people down to an 80% work share and still meet the FTE requirements. Now it makes it a little bit more difficult. But I think most people should be able to meet the FTE safe harbor if you put them on a work share program and then bring them back full time prior to that June 30th safe harbor cutoff. So we still have a window of 4 to 6 weeks that we could utilize this program and still meet that FTE safe harbor. So within the work share, you are allowed to have separate employees into different work groups. So I'll use a dermatologist office as an example. That if you have 3 estheticians that you want to bring back at 50% because you still don't really have the work for them, but you have two office staff that you need back at 80% because people are starting to call in and you're taking in some patients. You can set that up as 2 separate work share plans within the different work groups. What you can't do is bring back 2 office staff at 80% and 2 office staff at 60%. Everybody that's effectively performing the same job function needs to be treated the same. This is all of the work for the work share is filed by you, the employer. It is submitted through Michigan Unemployment, or if you're out of state, most other states have a similar program. I know California does. But you file through your MyWham account, which is your Michigan online unemployment portal. And then you end up certifying every 2 weeks that the employees are still working what you reported on the program so that they continue receiving the benefits. The employees do not need to do anything unless they want to change the way they receive their payments. So it defaults to them receiving a prepaid debit card that's then reloaded every 2 weeks. But if they would like direct deposit for the unemployment benefits, they can log on to MyWham, create an account, and change it to direct deposit. The big downside to the workshare program, besides the FTE challenge, is the lack of flexibility. It's not something you can change week to week. If you want to change the plan that you're under, you will need to amend the plan to UIA, which then they need to approve again, or you need to cancel the plan and reapply. Again, they need to approve it again. So I guess before we move on, does anybody have questions on the work share program? Let's see. Can you reduce hours, utilize work share plus bonus and employee since the bonus doesn't affect hours / work share? It's tough. There isn't definitive guidance on that. Most likely, I don't foresee it causing an issue, but I can't definitively say that yes. What I would suggest with that is if you're looking at utilizing work share for the next 4 to 6 weeks, I would utilize the work share program. And then if you are going to end it so that you meet the FTE safe harbor, upon ending the work share program, you bonus out the employees. If that's not possible, I can't, unfortunately, I can't give a definitive answer on that. But in talking with Michigan Unemployment, they have seemed very flexible in terms of the work share and understanding in terms of, we had one where the employees are paid on a commission basis, and we weren't sure how to handle that with the commission not necessarily aligning with the reduced hours. And they pretty much said, take your best guess. You have a reasonable record of what their historical commissions have been and what their historical hours is. Make a reasonable proposal, essentially, and that's the best that we can do. All right. Any other work share questions before I move on? All right. And we are hitting 1 o'clock, so if you need to drop off, you can drop off. I will be, this is being recorded, so I'll post it on our website if you want to catch the remainder of it later on if you do need to drop now. This is the last piece, and I'll just gloss over it quickly because right now we're not seeing a lot of people that is impacting, but as we bring employees back to work, I think it's going to become a factor. Now, the big double asterisk at the bottom of this, which most of you on this call fall under, is that employers with fewer than 50 employees can apply for an exemption to this act if they deem it will be detrimental to their business. That sounds nice, but they haven't really told us what detrimental to your business means. So I would be prepared to adhere to this until we receive guidance on what exactly it means to opt out. And I will say that in terms of opting out, this doesn't actually cost you money because you do recoup the funds through a payroll tax credit. So unfortunately, you do need to front the money to pay the employees, but then you do recoup it through payroll tax credits. So to be eligible for the MLA, you have to be employed for at least 30 days. For anyone, and this is the big one where it's going to come into play, is that if you have a kid at home who either their school is closed, their daycare is closed, their babysitter refuses to watch them right now because of COVID, they are eligible for family medical leave. So that's where I see most people becoming eligible for this. So this is what's required for them to become eligible to receive this. You either need to be subject to a local quarantine, which this realistically won't happen because the Michigan is not considered a quarantine. Businesses are closed, there is a stay home order, but you are not required to be in your home. Employee was advised by a healthcare professional to quarantine. Employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Employee is taking care of an individual subject to local quarantine or has been advised to self-quarantine. So if someone's spouse is sick, has COVID-19, they are eligible for it to stay home and care for their spouse. And then the big one, if you have a son or daughter whose care is unavailable, they are eligible for it. Then the last one is they're experiencing COVID symptoms. This one, they're going to need to end up going to a doctor for that. And then obviously, as I said before, employers with fewer 50 employees can apply for an exemption, but we don't know exactly what that looks like right now. So you end up having to pay the first 2 weeks is paid sick leave, or whether it's full-time or part-time employees, you pay them what their average wages are for the first 2 weeks. And that is up to $511 per day. If after the first 2 weeks, they then switch to 2/3 of their normal pay rate. You do end up receiving a credit against payroll taxes for payments paid under the FMLA. So like I said, you do end up getting it refunded, but you need to front the money. Like I said, this isn't a huge deal right now, but I think it's going to as we move along. So that wraps up everything that we had to cover. I can stick around for a few minutes to answer any questions that you have. So I will unmute everybody at this point if they want to jump in and ask any questions.
I'm just being 30 more seconds.
All right, so I'm actually going to keep everybody muted, but if you want to ask a question, you can unmute yourself. If you're on the computer, it's on the right-hand side by the chat screen. If you're on your phone, I believe it's in the bottom left corner of the phone. All right, if you don't have any questions, thank you very much for joining us today. We do plan on doing these as they release additional guidance. So keep an eye out in your email as we do expect to do more of these in the future. So I'll stick around for a few minutes if anybody has anything, but otherwise, thank you and have a great rest of your day.